Have you ever found yourself in a situation in which you had a trade that was running in very good profits, but you became greedy and you held the position? What happened? The market went back exactly to your entry. Or the opposite thing. What happened? You had a trade that was running in basically very good profits and you closed it, but the trade continued to run and you would have made much more. Well, those are all very common situations in the market, and in today's video we'll be explaining exactly how you can avoid finding yourself in this very unpleasant situation. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms. So make sure that if you enjoyed the video, you subscribe. Okay, so let's speak about how we can be setting our targets for the maximum profit. Now, there are two main ways in which you can do it. You can be setting your take profits by using Fibonacci and by using structure and patterns. And I will show you exactly how you can do this to have basically the best efficiency in riding trends and basically keeping your take profit hit ratio up basically and at a good rate. Now, let's start by Fibonacci. To explain how you can be setting your targets by using Fibonacci, let's take the trades that we executed with students last week, okay? The trades that we executed on Euro JPY with students. Why was our take profit exactly here and why was our take profit exactly here? Now, first of all, let's back this up 1 second, okay? Why did we want to see the market make these continuations to the downside? Because clearly the market was trending, we had a nice impulse and a correction, and you expect the next impulse to the downside. We had a clear confluence of Fibonacci on this retracement. We had from a COT perspective, so what hedge funds are doing at the moment in the market, what did we have? We had clearly hedge funds opening more longs than shorts from a JPY perspective, which is exactly what you expect during a period of uncertainty because money should be flowing to the JPY as a safe haven. In fact, what we could see, net positions going from minus 56k all the way up to plus 32k. So a strong increase in the strength of the JPY, which basically should make JPY, specifically Euro JPY and all JPY pairs make a move to the downside, because if JPY gets stronger, Euro JPY is supposed to be making a move to the downside. So everything was pointing downwards. We found one of our valid entries exactly here. Why did we take the trade exactly here? I can't share all the rules of my entry strategy, but I want to speak about targets today. What was our target exactly here? Well, very simple. If you remember from the video in which we explained how to use Fibonacci, okay? If you want informations after an impulse on a correction in the market, what are you supposed to be doing? Taking your Fibonacci from the high to the low of the impulse, and you have informations on the retracement. But if you want informations on the next impulse to the downside, what are you supposed to be doing? Simply moving your Fibonacci from the impulse to the correction, and you will have two possible targets. The minus 27 as target 1 and the minus 0.618 as target 2. Well, the minus 27 as target 1 is basically the target that you're supposed to be aiming at most of the times. Why? Because in a trending market, what basically goes on in a trending market? If you have a market that is creating lower lows and lower highs, there will always be retracements along the way. And if you're riding this wave to the downside, you want to take your profits at the minus 27 because it is the level at which most of the times the market will start the next retracement. So you will be riding the trend, the down move, basically the wave to the downside for the maximum profit. And in fact, in this case, where did we take a profit? Very simple. Fibonacci from the high to the low of the retracement And our target was exactly here, right at the minus 27. And in fact, if we go on the 4 hour and we see where we were taking our profits, we took our profits here. And after the market hit the minus 27 twice, what happened? The market exploded to the upside. So we were able to ride this down move for the maximum profits by using a Fibonacci basically based take profit, which is what you're supposed to be doing when a market is trending. And in the exact same way, in this setup that we executed with students last week, and if you remember, I also made, in both cases guys, both when the market was here and when the market was here, I made a multi-time frame analysis on TradingView telling to all of you, be looking for possible shorts. Me and my students are looking for possible shorts. So make sure you're looking as well with the rules of your own strategy. And both times the market created this beautiful push to the downside, providing to us one of our valid entries. And how did we basically calculate the target for the trade that we executed last week? Very simple, same concept, Fibonacci from the high to the low and take profit at the minus 27. And in fact, from a 4 hour perspective, that is exactly where our take profit was for a nice 1 to 3 risk to reward. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover in the next video. And if you want to go and see the previous analysis basically on EuroJPY, I will post the link in the description for both this analysis and also for the GBP CHF, a basically analysis that I will be speaking about now as an example for the case in which you have to be looking at a target using structure. So let's speak about basically this other concept. So recapping, if you have a trending market, it's best to be using Fibonacci levels as take profits, exactly as I showed you here. But if you basically have to be looking at targets by using structure and patterns, that is the best way to do it if the market is, for example, in a consolidation period, or anyway, if you have a very near level of structure, which in a trending market you usually don't have. So you can't use structure, but you can use Fibonacci on the other side. If you have a market that has basically a lot of structure because it's more or less moving sideways, then you can use the nearest levels of structure to actually take profits. And I will now show you exactly how to do that. And I will be taking the example of the trade that we closed this week, actually yesterday, with students on GBP CHF. Let me explain basically how we basically and why we closed this trade right now here. Now, first of all, I made the full analysis on GBP CHF at the beginning of the week, telling to all of you, be expecting the market to make this move to the downside on TradingView. Now, by the way, I will link that analysis too in the description. And why did we want to see the market make this move to the downside? We wanted to see the market make this move to the downside because from a weekly perspective, what did we have? Clearly a market that had created a beautiful impulse, beautiful correction, and we wanted to see the next impulse to the downside at least start. That is what you want to see when you have an impulse correction and impulse pattern to the downside. What we also had was a market that was retesting clearly this structure. So previous support here now turned resistance at this level. And what we also had basically is, as usual, if you want information on the retracement, what are we supposed to be doing? Taking our Fibonacci from the high to the low of the impulse, and what you can see, the 0.618 is lining up perfectly with the previous support to resistance, indicating as well for a nice move to the downside. And as even more confluence for the move to the downside, we had basically, from a daily perspective, the possibility to create this weird head and shoulders. And as even more confluence, if we go and see what we have from a COT perspective on the pound, so what hedge funds are doing at the moment from a pound perspective, what we can see that hedge funds have been opening a lot of shorts on the pound and closing a lot of longs. In fact, net positions went from plus 35k to minus 12k with the last report showing that they opened another 1,900 short positions and closed 3,300 longs. So a lot of shorts getting added and a lot of longs getting closed. So overall, GBP CHF, definitely all time frames and everything was indicating for a nice move to the downside. And in fact, we were able to capitalize with students on this nice move to the downside. Now, obviously, why our entry was exactly here, that is part of the mentorship program, why the stop was here. But that, like almost all the rules, basically I can't share them. But what I can share is a very basic concept. We had this clear structure getting rejected, and we had this support here, broke to the downside, turn resistance. Very basic concept. This one I can show it to you guys, which you can be using basically in your own analysis and trading plan, developing a strategy. But let's speak about why we basically exited the position exactly here. Because if you look at the structure of the market and the pattern that the market created, after the move to the downside, we were already in the trade and we were running a 1 to 3 risk to reward, so 3R on the trade. So basically we were already satisfied basically with our overall trade. And what did we have? A situation in which the market had and has created an M formation, basically completing exactly at this structure. So after an M formation, for those of you that don't know, you expect the market to see a move, you expect the market to make a move to the upside and basically go and retest the neckline, the previous support, turn resistance. So from a pattern perspective, you wanted to see a move to the upside. From a structure perspective, we have support here, which is again support here. And again, we want to see a move to the upside. So it's best to exit the position, take your 1 to 3 risk to reward, and basically you won't have problems because 1 to 3 risk to reward is very good. Even if the market will melt to the downside, it might seem that we actually did miss out on this nice move to the downside, but we actually didn't. Why? Because we are still in the trade on a Euro GBP. Now these two pairs are correlated. What does it mean? It means that they more or less move in the same way. So if Euro GBP goes to the upside, GBP CHF goes to the downside. And this trade, we kept it open. So basically, if GBP CHF will continue to melt, it seems that like we missed out on the move to the downside on GBP CHF, but we actually didn't, because our long on Euro GBP will go to our overall upside target for a nice 1 to 4.5 risk to reward. So better to basically take our profits on GBP CHF and continue to run Euro GBP, because on Euro GBP, basically we have high probabilities of continuing to target, while on basically GBP CHF, as we said, we have structure and pattern. So in a market that is moving sideways, use patterns and structure to take your profits. In a market that is impulsing and correcting, so basically trending, use Fibonacci as I showed you basically in the previous example. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as having me answering every question that you have each and every day. So I suggest you go and check it out, or go and check out the next video.